This is Rhonda Brooks of Farm Journal Media, and I'm here today at Corn College near Coldwater, Michigan, with Mark Gold, who's the owner of Top Third Ag Marketing out of Chicago. Mark, we want to welcome you here today. Really appreciate you talking to us. And what we've been discussing are the marketing opportunities that farmers have, whether they are in a drought situation or if they have good crops. Tell us a little bit about that.
Well, with today's price, we have roughly $8 corn and $16 beans. And the problem becomes, if we happen to move back down between now and October, if you've lost bushels out there and you know you're going to get an insurance check, the basis of that insurance check will be the spring average and the October average price. So if prices go back to the spring price, which was $5.50 corn and roughly $12.50 beans, you're going to leave a huge insurance payment on the table if you don't protect it now in case prices move lower.
So that's for those guys that are in drought.
So for the guys that are in drought that know that they're going to get a check, you want to ensure that you get the maximum insurance payment. Now, if corn does go to $10 or even $12 this year, if the shortfall is that great, you will lose the premium that you pay for that put option, but now your average price for your insurance policy by October is going to go through the roof because of the extreme high prices. Now, the same is true if you've got the bushels. If you haven't been affected by the drought, if you're one of the lucky
ones out there that actually has a crop,
you still want to use these put options to manage the price risk. Because as we've seen so many times, whether it was the drought in '83, the drought in '88, the 2008 bull market, these prices had a strong tendency to give back a lot of those gains by October. So no matter how bad things are, we know that the market is a futures market. We built a lot of that in. Don't get caught up into thinking that these markets can't go down. And if they have the possibility of going down, if you've got the crop, you need to protect these incredible prices. If you don't have the crop, you need to protect that insurance payment between here and $5.50 corn and between here and $12.50 beans.
Is this something we should be doing right now?
Right now. This is not something, well, let me think about this for a while. These markets can turn on a dime. People ask me all the time, or have been asking me in the last several weeks, are the highs in? Well, nobody knows the answer to that, but we do know back on July 20th, we made the high in the corn, we made the high in the beans in the lead option. We haven't come back over those prices yet.